Everyone loves bull markets. Prices rise, portfolios grow, and optimism is everywhere. But the true test of an investor comes in a bear market when fear takes over and prices crash. In this episode, we'll explore the mindset and tactics you need to survive a crypto bear market. So let's start by answering the obvious. What is a bear market? A bear market is when prices consistently trend downward for months or even years. In crypto, that often means Bitcoin dropping 70% from its all-time high, and altcoins losing 90% or more. It feels brutal, but remember, bear markets are not new. They're part of every financial cycle and they don't last forever. And while it's impossible to predict when exactly a bear market will end, there are tactics and mindsets that can help us navigate these choppy waters and come out stronger on the other side. The first one is having the right mindset. And this is critical because your thoughts will dictate your actions, and your actions will determine your investment's success or failure. When prices are soaring, everyone thinks they're a genius for entering early. But when prices plunge, fear and regret set in. You might question your choices and wonder if you missed the chance to sell before the dip. But instead of focusing on what could have been, concentrate on what is within your control. Your mindset can make all the difference between a disastrous decision and a smart, level-headed move. So here's something to consider. Do you want to be the person who, when faced with a difficult situation, reacts impulsively out of fear or anxiety? Or do you want to be the person who stays cool, assesses the situation objectively, and makes a well-thought-out decision? If you choose the latter, then you're on the right path. Let's explore 2 ways to cultivate this mindset. The first is reframing how you view a bear market. Instead of seeing it as a disaster, think of it as an opportunity. While it may feel like a setback, remember that every great investor has experienced several bear markets on their journey. They understood that corrections are not the end of the world, but chances to buy low and prepare for the next bull run. So embrace the challenge and use it to your advantage. Take this time to assess your portfolio, adjust your strategies, and get ready for the next exciting phase of the market. The second is to adopt a long-term perspective. Don't let short-term price fluctuations dictate your investment strategy. Yes, staying invested during a bear market can be nerve-wracking, but panicking and selling is rarely the best choice. Instead, maintain a long-term focus and ride out the market volatility. Historically, Bitcoin has seen multiple recoveries after experiencing significant drops. By staying committed to your long-term plan, you position yourself to benefit from the inevitable market rebound. This requires mental fortitude, emotional resilience, and a strong belief in the market's long-term growth. But the payoff can be substantial. Now let's move on to some practical tactics. Our first tactic is risk management. When the market is on a roller coaster, it's easy to get swept up in the excitement and take unnecessary risks. However, it's during these times that risk management becomes crucial. That's where the old investment adage comes in. The first rule of investing is protecting your money. If you lose your capital, you lose everything. So don't chase speculative altcoins or use excessive leverage just because others are doing it. Instead, prioritize safety and protect your hard-earned money. Diversify your investments across different asset classes and avoid putting all your eggs in one basket. Be cautious of potential scams or shady projects that may seem too good to be true. Remember, a successful investment journey is a marathon, not a sprint. So take a measured approach, manage your risk, and ensure your capital is secure. Our second tactic is dollar cost averaging. During a bear market, the temptation to time your investments can be strong. You might think, if I just buy at the lowest point, I'll make the most profit. But timing the market is notoriously difficult, even for seasoned investors. So instead, consider adopting a dollar cost averaging strategy. Dollar cost averaging involves investing a fixed amount of money at regular intervals regardless of the market conditions. By doing so, you avoid trying to predict the market's unpredictable nature and potentially making costly mistakes. Plus, this strategy allows you to buy more assets when prices are low and fewer assets when prices are high, helping you to potentially increase your returns over time. Just ask any investor who consistently DCA'd into Bitcoin during the previous bear markets. Those who started investing in January 2018, for example, when Bitcoin was trading around $14,000, would have acquired a lot more Bitcoin than those who only invested when prices were much higher, and now that same group is reaping the rewards. Our third tactic is building skills and knowledge. A bear market is not just about falling prices, it's also a period of consolidation and growth in the crypto space. While other investors might be paralyzed by fear, take this time to equip yourself with valuable skills and knowledge. This could include delving deeper into blockchain technology, exploring new crypto projects, or brushing up on your technical analysis skills. You can also invest in your personal development by reading books, attending webinars, or taking online courses. This proactive approach to self-improvement can make you a more knowledgeable and better investor. By the time the bull market returns, you'll be ready to make informed decisions and capitalize on new opportunities. Let's wrap up by discussing common mistakes to avoid during a bear market. The first one is selling everything at the bottom out of fear. This is perhaps the most common mistake investors make. When prices drop, fear sets in, and you might feel like you're losing a lot of money. But selling at the bottom is rarely a wise choice. You're locking in your losses and missing out on the potential for a rebound. Remember, a bear market is a temporary phase in a cyclical market. It may feel like the end of the world, but it's not. Staying committed to your long-term strategy and weathering the storm is often the best course of action. Mistake no. 2 is chasing risky moonshot coins. In a bear market, the urge to chase risky investments in search of quick profits can be strong. However, this often leads to disappointment and potential losses. Instead, focus on blue-chip assets with strong track records and potential for long-term growth. These assets tend to be less volatile and more likely to weather the storm of a bear market. Mistake no. 3 is ignoring security. When prices fall, scammers and hackers become more active, targeting investors who may be feeling vulnerable or desperate. Don't let this happen to you. Stay vigilant and prioritize the security of your investments. Use strong passwords, enable two-factor authentication, and be cautious of suspicious emails or messages. Your security should always be a top priority. Mistake number 4 is losing focus and giving up entirely. Perhaps the worst mistake of all is abandoning your investment strategy and giving up entirely. Don't let short-term setbacks derail your long-term goals. Stay focused on your investment strategy, be patient, and trust in your ability to navigate through the challenges of a bear market. Remember, a bear market is not the end of the world. It's a temporary phase that all investors must endure. By adopting the right mindset and implementing practical tactics like risk management, dollar-cost averaging, and skill building, you can not only survive a bear market, but thrive in the next bull run. Stay disciplined, stay informed, and don't forget that winter doesn't last forever. Thank you for watching this video. We hope you enjoyed the insights shared in this episode. At DCA Crypto Investor, our mission is to empower you with the knowledge and tools to make informed decisions in the world of cryptocurrency investing. We believe in the power of community and are committed to providing a platform where investors of all levels can come together, learn from each other, and navigate the exciting world of cryptocurrencies. If you found value in this video, please hit the like button and subscribe to our channel. By doing so, you'll be joining a community of like-minded individuals who are passionate about crypto investing. Together, we can stay updated on the latest trends, market analysis, and investment strategies. Don't forget to turn on notifications so you never miss out on new videos and live streams. Your engagement helps us continue delivering valuable content that enhances your investment journey. Thank you for being a part of the DCA Crypto Investor community.